More than 259,000 jobs created in February. The expectation was we were going to see 75,000 jobs created. And as I mentioned, that is quite a bounce back after the weakness that we saw in December and January. We've still obviously got a long way to go to make up all the jobs that we have lost. But this is something that people on the positive side were expecting, because many provinces slowly began to allow businesses to reopen in February. Non-essential retail in Ontario, Quebec, restaurants in Alberta, and some parts of Ontario. I'm also looking at the unemployment rate, where we saw a noticeable improvement there, 8.2%. Now, the expectation on Bay Street was for 9.2%, so that is much better than expected. In fact, it's better than the most optimistic estimates. In a best case scenario, it was expected that the unemployment rate might get down to 8.6%. Now, I mean, context is everything, folks. We started last year with an unemployment rate that was basically, call it below 6%, but this is a positive storyline when it comes to this economic recovery we're watching in this country. Now, we mentioned earlier in the program that this week, the Deputy Governor of the Bank of Canada highlighted that the reason the Bank of Canada made no change on interest rates or bond buying is they're still concerned about the long-term picture on employment. And I'm just going through the release from Stats Canada right now and taking a look at some of the broader figures here. And as they note, the 259,000 jobs that were created, that 171,000 were in part-time, full-time was 88,000. So that definitely speaks to the fact that you saw some improvements in the kinds of jobs where reopening the economy can be lifted, whether it's restaurants or other areas. I'm going to continue to go through this data here, but I do want to get some instant reaction to the headline numbers from Veronica Clark. She's an economist at Citi, and she is standing by. So, Veronica, the headline number, as I mentioned, I'm going to go through some of the details here, but the headline number is better than expected. What's your initial reaction to this February read?
Yeah, that's an amazing number. So I was already expecting a little bit above consensus. I was at 150. Of course, that's even much better than my forecast. It really reverses the job losses, I think, that we saw the last 2 months in January and December. Once I dig into the report, I really wouldn't be surprised to see that in things like retail, restaurants, all that we know started to reopen over that February period.
Yeah, and just sort of taking a look here again, and as I mentioned, when it comes to the there was creation of jobs, both part-time and full-time, but part-time was leading the charge there with more than 170,000 jobs created. I'll read directly from the StatsCan report to give us a better picture of what was happening on that front. They noticed that the increase in part-time work mostly reflected what happened with retail jobs, accommodation and food service industries, many retail stores and restaurants reopening in February after the closures that were mandated at the end of December. And Veronica, we were talking with our colleague Shelley Hagan of Bloomberg earlier, who noted that when it comes to the percentage of jobs lost that still have to be regained to sort of get us back to something that, is a version of normal, a lot of those jobs are in those sectors, accommodation, services, etc.
Yeah, exactly. Yeah, before this report, and I'm sure it's probably still true after this February number, it was really over 90% of the jobs that we lost pre-pandemic levels were in those types of sectors. And that really, I think this report, is a signal that we could get a really quick rebound in some of these.
I'm just trying to go through some of the details of the report. The labor force participation rate held steady, and I only highlight that because prior to this had declined for 2 consecutive months. You always worry about, what someone's mental state is. Do they still feel that they can go out there and get back on the horse and look for a job? And I only say that because the unemployment rate saw quite an improvement at 8.2%. That's the lowest rate since March of last year, when obviously things started to deteriorate, not to the full extent. It sort of started to bleed into the months that followed the early days of the pandemic. But, to be back at an unemployment rate of 8.2%, considering we were in double digits as you went through some of those dark periods last year, what's your take on that?
Yeah, I mean, we definitely, of course, want to see the unemployment rate falling. It is interesting that participation held steady. We had seen that decline just as, businesses were closed and people, figured it probably wasn't worth finding a job for the next few months. Things will reopen again in a few months. So there is some upside to participation that will actually push, up the participation or the unemployment rate a little bit. But it's still a very good number.
All right. And as I look across the country, and I made the reference to some examples, the non-essential retail in Ontario and Quebec during the month, restaurants in Alberta and some parts of Ontario. And as I read through this StatsCan report, you do see a lot of references to those particular provinces. Employment in both Quebec and Ontario was on the rise. In fact, between the two provinces, they created, it looks like, north of 200,000 jobs in February. But we saw employment gains in BC and Alberta and Manitoba, offsetting, I suppose, some weakness that we did see in Newfoundland and Labrador. I guess the vaccine question becomes a really important one. I imagine you're watching very closely, because if we're going to continue to see, bounce back months, presumably restaurants and retailers and certainly the travel industry really have to be able to have confidence that they can do business the way that you would normally hope to do.
Yeah, definitely. I mean, we are certainly watching what's going on with vaccines. We had a month period or so there where, we were slower than what we would like to be. We have, of course, picked up the last few weeks, though, and I expect that to continue. So as long as there's no more, hiccups there, that just means further reopenings and a return to normal.
Veronica Clark of Citi joining us as we cover this breaking news that the Canadian economy created many more jobs than what was expected on Bay Street in the month of February. This, as we have seen, pockets of the country slowly reopen. Veronica, I was looking for this number. I finally found it in the StatsCan number for the portion of Canadians who find themselves in the long-term unemployment camp. And these are people who have basically been unemployed for 6 months or more. And as I was alluding to before I came to you, when the Bank of Canada kept rates unchanged and didn't move away from their bond buying program this week, the deputy governor the day following gave a little more context on their concern about just the slow recovery in long-term unemployment, which coming into this report had stood at around 512,000. Now, it did improve in February by about 49,000. So the number of long-term unemployed people who had been looking for work or been on temporary layoff for 27 weeks or more, it came down by 49,000. That's almost 10%. I guess I wonder what those numbers on their own mean to you. They're still very high, but your takeaway on that?
Yeah, it is a high level, and of course the Bank of Canada has been citing that metric a lot. It is, of course, good to see it moving in the right direction. I do think, though, that it's kind of telling us just more about the duration of the pandemic itself. Of course, if you lost your job in a restaurant or retail back in Q2 of last year, you really maybe have not been able to get that job back because we're still facing activity restrictions on those industries. So I would expect that comes down even more over the summer as we can reopen.